Well, here we go. The stock market is about to get a little bit crazy as we are officially entering Q1 earnings season this week. Earnings do rapidly pick up, and today I'm going to show you some of those earnings that are going to be coming this week. Obviously, a bit of a quiet day in the UK market as the UK market is short, but the US is going to be open, and there's a lot of US earnings coming our way. Big thing that's going to be focused on this earnings season is full year guidance, and are any companies going to be brave enough to give full year guidance with the tariff news that's out there at the moment? But at the moment, it's going to be a very tricky subject about how many of these stocks are still doing very well, but how many are performing badly, and how many are performing badly because of the tariffs, and how many are actually performing badly because they're actually just not doing well as a business. And I think this is going to be a very tricky earnings report because you're going to have to try to figure out which ones are doing that, which ones are actually performing badly and just blaming it on tariffs. Because the easy get out of jail card right now is to go, yeah, the tariffs are affecting us, when realistically maybe they're not. So we did have the tariff news that came in, well, the Liberation Day, that came in on the 2nd of April. So it's realistically not actually going to be in the Q1 earnings. It's all going to be like, what are you seeing in Q2 so far? What is the impact in Q2? And I think we've seen a few examples of that where the likes of ASML is one company in particular that didn't have the best Q1 on a bookings point of view. And they were like, oh, the reason why is because of the tariff uncertainty. And I look at a company like that and I'm thinking, well, should you have seen that just yet? Because right now, you look at April the 2nd, that was not in your Q1 earnings. So should you be seeing that uncertainty right now, or are you just having a bit of a slowdown and you're not wanting to tell us about it? Another one that happened on the UK market was Bunzl. That was another UK stock that went down, blamed the North America business. And it's like, well, should you have seen anything just yet? And that's going to be the really tricky thing as investors, working out what is actually getting affected by tariffs and what is actually them just trying to get the easy out card. One thing that has surprised me at the moment is when we actually look at true inflation on the US, I thought we'd see a bit more of a spiking up, and right now it's holding pretty firm at the moment. So I expected that to have a bit of spike up with some of these tariff impacts coming in at the moment, but maybe it'll take a while to get through the stock that was maybe imported without the tariff news before we see that kind of into the system. That is probably something to kind of point out. Anyway, the week ahead, the crazy week ahead. So Monday, not too busy, as you can see here, nothing that I'm too big on. As we get onto the Tuesday, the big one of the day, Tesla, that's going to be a very interesting one. So Tesla at the moment had a bit of a tough time so far, year to date, down 36%. And really, when you zoom out of Tesla, it's been so far a pretty poor decade for Tesla. Really, since 2021, the stock's done nothing. It's about 2%. Now, during that time frame, it has been very volatile though. So there has been times where it has gone up a lot and dropped a lot. So you would have been able to probably make good money from it as long as you're buying near the bottom of where the stock has dropped. And there was a couple of times during this period here where I actually was buying that and made some good money off Tesla. Tesla's been actually a really good performer, but I've not held any shares in Tesla since 2022. I feel like since 2022 Tesla has lacked a lot of innovation and they have fallen behind the competition. So I would like to buy Tesla, but it would have to be at the right value, and right now it's way off where I would be interested in. There's just, for me, the financials are way back behind where the stock is valued, and sure, there's some premium on there for the products that they have coming up, but I look at what is priced in at the moment at 756 billion market cap, and there's a lot of that already priced in with full self-driving, which makes me a bit nervous to buy at these levels. On a forward P right now, you're picking it up at 94 times earnings. And the problem with Tesla is you're already having the downgrades. Like 2023 was a bad year for Tesla, 2024 was a bad year for Tesla. It's looking like once again 2025, so 3 years now with bad financials of Tesla, but yet it's still getting valued this high because of the potential it could have. And it's like, well, eventually, how long do you keep valuing it off the potential, which isn't being shown yet, and you actually start valuing it over the financials, which for the last 3 years the financials have been poor. I mean, even this year at the moment we're looking for a little bit of a slight increase on an EPS and a revenue growth of 9% year over year, which for a 96 forward times earnings businesses shouldn't be valued that high. Let's be serious here. And if you look at the first quarter, 1% revenue growth, EPS to stay flat. Second quarter, EPS to stay pretty flat revenue growth as well. To get to that full year guide is going to be pretty tricky for them as well. And that's also when you look at the downgrade that they've already had to do. If we go on Wayback Machine and we go to the 2nd of January, so we're only going 3 months ago. This year we were expecting 16% revenue growth, and analysts have already this year downgraded that to 9. It's nearly half the forecast for the revenue growth this year, and we're only 3 months into the year. If you look at the EPS, we're expecting a average estimate of 3.26, and right now we've already gone down to a 5.52. So the EPS has once again been downgraded by 20% this year, which is this is what I always say to you guys, is what you've got to be careful with earnings, and I see this all the time, is people will look at the earnings reports and just take Google here. This is something that I'm going to use a little bit later on in the video. But for example, if you take Google, everyone stares at the numbers and go, oh yeah, they did a slight EPS beat. Oh, the revenue missed a little bit. Sell the stock. Or the revenue beat by a little bit and the EPS beat by, oh, amazing earnings. The stock needs to go up. And so many people focus on like the short term and what numbers they're beating by slightly, or if they're below it slightly. Where for me, the big thing is looking at the bigger picture. And when I look at the bigger picture, for example, if Tesla come out with a beat in this earnings report, for example, you go, oh, it's amazing, the beat earnings. But let's not forget, in 3 months, the analysts have downgraded the revenue by half, and the EPS is downgraded by 20%. So this is why I always look at analysts, and when companies bring out numbers and people react off the numbers, if they beat or by a little or miss by a little, and it's like, well, they're only beating or missing on the numbers that the analysts have changed to 2 weeks ago. Like, the bigger thing is to zoom out and look at where the numbers are going in the longer term. That's the most important thing. But the other issue that you have in this quarter as well with Tesla is that the deliveries are down. So the deliveries are down 13% in the same period last year. They talked about the Model Y production in China, which I think was the last good vehicle that Tesla did. I still don't know why they did the Cybertruck, and then alienated the EU and the China market. Absolutely insane. And to make such a vehicle that is so marmite like that on appearance is crazy. And obviously the backlash against the CEO Elon Musk with his political views. I've always said before, like, whether you disagree with what Elon Musk's doing in a political point of view, as an active CEO, you can't get that involved in politics as what Elon Musk has been doing. That's the issue that he's got at the moment. And if deliveries are down 13%, then, I mean, have they increased where's the slide? Have they increased the prices enough to cover up a 13% drop in deliveries? And as well, I guess the energy business could maybe make up a bit of the gap potentially. But as well as that, like, EPS point of view, are they going to be able to make more profit from that? I don't know. These numbers even right now look quite hard for Tesla to beat, in my opinion. But we've seen before, the stock has gone up on poor numbers. This is where Elon Musk has to work his magic, because what he'll have to do is when these, for the last kind of 2 years, while these numbers have been pretty poor, what he's been able to do is he's been able to come out and do a headline like, oh, we're going to have full self-driving in 2 months' time. And everybody goes, oh, forget the numbers, full self-driving in 2 months, the stock goes up. He does the distraction tactics. Don't look at the financials. This is your headline. We're going to have full self-driving in 2 months. Or we're going to do this in a few months. Or we've got this new low-price vehicle coming out in a few months, which I think, funny enough, they just actually delayed it today, and that's why the stock's down 4%. But he's got to do, if they are going to be as bad as what I think they're going to be, he's going to have to do a distraction tactic, which he normally does when they're bad earnings, and it works. That's not actually me criticising Elon Musk as well, by the way, just to make that clear. He, as a CEO, you're there, part of you is there to protect the share price, and if you can bring something out to distract the financials and save your stock price, you do it, and that's what he's been a master of. So he's going to have to probably conjure something up in the next tomorrow. So see what it is, when the headline comes out, whatever it is, full self-driving's available in China in 2 weeks' time. You watch that headline, that's what he'll have to do, it'll happen. And I might even come back with a video tomorrow and go, or on Wednesday and go, there you are. There's the distraction tactic there. Moving on to the next one, we've got Enphase, a stock that I own at the moment. Enphase actually brought out their last earnings, and their last earnings were actually pretty impressive. Their EPS was a beat by 0.19, so no small beat there. And revenue as well, 26% growth and 5.2 million beat, and there was a good hike up as well on the guidance as well. And the big thing that people will talk about Enphase is probably like manufacturing, and they did say in the last conference call like they are moving their battery cell manufacturing outside of China. They said this last before even the tariffs came in. But since then, the stock has gone lower on the tariff news, even though it probably won't be affected by it that much, which is the crazy thing. And financially as well, you look at this year's numbers. We're expecting EPS to go from $2.37 to $3.29 and 15% revenue growth. That is really good, especially for a company that is in a major growing TAM like Enphase is for like the next 5 years, solar energy, and you're picking it up at 16 times earnings. And even in my opinion, like these last earnings were actually really good, and yet the stock was. By the way, this is Seeking Alpha. If you don't have Seeking Alpha, like this is my go-to platform in earnings season because you get all the notifications when their earnings coming out. You get to see what the analyst numbers are straight away, and you can also read conference calls on there. So if you do want to join, there's a link in the description. By the way, guys, I used to pay for it myself before they actually gave it for free, so I could use it in my videos. So it's a great platform. But yeah. When they last brought their earnings out, it was $66, and obviously now we're down to $52. And this is like one for me like that doesn't make sense, because surely off these last earnings the stock should have gone up, and when you look at the current quarter's earnings, like 25% revenue growth, EPS to nearly double, yet the share price goes lower, just doesn't make sense. So we'll see what happens. One thing I'd like them to do is I'd like them to do a little bit of an extra share buyback. So they did do about 1 billion share buyback in July 2023. That's lasted for quite a long time. And if you look at the market cap right now, like Enphase is like a 6.8 billion market cap. So yeah, it's a good chunk of the market cap that they're buying back at the moment. But looking at where the stock has fallen since that time frame. Let's just zoom out a little bit. So if we do go back to like 2023, like the stock has fallen dramatically since that time frame. So they're able to buy shares back even cheaper now, which is great for the long term and like the EPS numbers. But they do sit on like 1.6 billion of cash, which if you do look at a 7 billion market cap, like that's over 20% of the market cap is in cash. So I would be like, yeah, start deploying very heavy into buying the shares at these sort of levels. If I were them, I'd really hope they do another share buyback or actively increase the share buybacks. And as well as that, if they do hit the full year guide, because we hopefully see the bottom of the stock and profitability returns, they're expecting to do 233 million in profit by the end of this year. In 2026, 360 million of profit. So they're hopefully going to be generating really good amounts of profit, so they can afford right now. If I were them, I'd be like, yeah, throw another like 300 million to a share buyback if I were them, and obviously that would be nearly another 5% of the market cap. So that's what I'm looking for them to do if they can do it. The next one, we've got Boeing. Not anything else really on Tuesday. On the Wednesday, not too much I'm really bothered about. AAA service now was interesting if it was the right price potentially. But Boeing's one that I'm interested in. Not particularly because I want to own the stock Boeing. Just even though if they didn't have a duopoly, these guys would have been bankrupt by now. But the reason why is because I own Zotefoams, and one of the major clients for them is actually Boeing. So if Boeing orders pick up, that could be a little bit of a tailwind for Zotefoams. But Boeing look like they could potentially be near the bottom now. They are expected to start going back to decent growth. It looks like the EPS is starting to ramp back up on them. So we'll see what happens with Boeing. On the Thursday, PepsiCo's interesting if it was the right value. Skechers, T-Mobile, Nokia, Intel potentially. But Google, Alphabet, they're going to be reporting. And Google at the moment, they're having a bit of a tough time at the moment. As you can see here, share price has dropped a significant amount. I can't believe it's going to be down to a 17 forward times earnings for one of the best companies in the world. And to be honest with you, like the last earnings I thought were good. EPS was a really nice beat with good growth. Revenue was growing at 11.8, nearly 12%, nearly 12% revenue growth there with Google. And you're looking at the all the numbers are massively moving up in the right direction. and it just doesn't seem to get in any traction at all at the moment, Google, which doesn't make sense. So we'll see what happens there with Google's numbers overall. But that's all the earnings that are going to be coming up this week. So yeah, we'll see what happens with some of these earnings. They're going to be interesting ones. So yeah, I hope you enjoyed the video, guys, and I'll see you in a bit.